Welcome back to the channel, everyone. Today I want to talk about how AMC, per these calculations, has 900% short interest, or the float has been sold 9 times over. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, you might start by asking, well, Tom, how can a float be sold 9 times over? Or how can AMC have a 900% short interest? And the simple answer is synthetic shares or naked shorts. Market makers actually get an exemption to create synthetic shares or naked shorts, obviously promising that they'll locate the shares as quick as possible and never abuse those synthetic shares. But obviously, as you and I know, that's exactly what they've been doing. They've been creating hundreds of millions and potentially billions upon billions of synthetic shares in order to crush the price of AMC with their illegal market manipulation. Peter Han says, at this point, you can't miss that something weird went on with AMC last year. This table just up front smacks you in the face. 29 billion shares traded on a float of just 513 million shares. 4.8 billion of those shares or of those trades were unreported. The previous year, only 2.7 billion shares traded and 300 million shares unreported. Volume increased by a factor of 11 and unreported increased by a factor of 16. Now you might say, Tom, how do we know that 28 billion shares of AMC was actually traded? Is that just a number plucked from anywhere random, or is it actually a factual number? Obviously, if we come here onto Webull and look at the AMC chart, on the yearly chart, we can see here that for the year of 2021, there was 28.405 billion shares traded. Looking at 2020, only 2.7 billion shares traded, and 2019, only 575 million shares traded. Now you might say, Tom, how does that compare to other stocks in the market? If we have a look at Tesla, something that has been the top traded stock on Wall Street Bets for many years now. In 2021, we only had 6.8 billion shares traded. But in 2020, we did have some more shares, but only around 19 billion shares traded. Even looking at some of the other largest stocks in the overall market, Microsoft, for example, 2021 only saw 6.5 billion shares of volume, and 2020, 9.4 billion, and 2019, 6.1 billion. So we can see that AMC was traded more times than every single one of these massive companies that are very, very, very popular and have been popular for many years in 2021. And as Oreo says, 2021 short data is updated. 11.288 billion shares are shorted and 4.795 billion shares are not reported. Doing some math, that's a short interest of roughly 900%. Hey Fintel, is this photoshopped as well? Guys, if you're worried about Fidelity based on how sketchy they've been recently and you're looking for another broker to sign up with, Moomoo are currently giving away a free share of AMC on top of their usual 5 free shares that are valued up to $3,500 each. When you open an account and make your first deposit, you get 2 free shares. If you can deposit $100, you get an extra free share of AMC on top of that. And if you can deposit $2,000, you get an additional 3 free shares on top of that as well, giving you a total of 5 free shares and your share of AMC. Moomoo is a brilliant commission-free broker that doesn't make its money from payment for order flow. Moomoo and Futu make their money from margin interest and from payment fees, and therefore you don't have to worry about your trades going through sketchy dark pools or being given to Citadel. Moomoo also has excellent technical indicators and advanced charting tools. They also publish daily short selling volume on top of a number of other important data points. So guys, be sure to sign up to Moomoo using the link in the description down below and deposit at least $100 to get that free share of AMC. So we can see here, if I zoom in a little bit to the data, the total volume traded is around 28.8 billion shares, very, very close to Webull. Now of those, Fintel is showing 18 billion of those shares as being traded off exchange, which is around 64% of the total volume. And the New York Stock Exchange is only showing 2.5 billion shares of AMC traded, which is around 9% of the volume. Obviously we know that most trading of AMC goes on off exchange in the dark pools or in those alternative trading systems. Now, the total reported volume is 24 billion shares when you include those traded on the New York Stock Exchange and all other stock exchanges and all of the off-exchange trades as well. But that leaves you around 4.795 billion unreported shares or unreported trades. Now, that is potentially the creation of synthetic AMC shares. Considering the float of AMC is around 513 million shares, that's a short interest of around 900% or 9 to 10 times the float. Now, I also want to talk about the dynamics of a short squeeze and what typically happens around the time a short squeeze actually occurs. In tomorrow's video, I'm going to talk about whether $100,000 per share of AMC is potentially real or realistic, but today I want to focus on the short squeeze dynamics. So you can see here the Volkswagen chart overlaid onto the market crash of 2008, and there's some very interesting things that jump out here. Now, as the overall market started to fall, the overall price of Volkswagen started to increase. This is likely because a number of short sellers started closing their Volkswagen short positions in order to reallocate their portfolio and short more profitable stocks or short stocks that were actually falling. Obviously, if the price of Volkswagen is increasing, that means shorts are losing money, and therefore they likely got out of their trade by covering their shorts in order to short basically anything else in the market that was actually falling. Now, as you can see here, the market actually had a bit of a recovery just as Volkswagen started to run up or shoot up quite drastically. Now, I imagine what happened here is maybe a large fund got liquidated and had to buy back all of their shorts and liquidate their entire portfolio or cover their entire portfolio of shorts. Now, that means a lot of buying of different stocks, not just the Volkswagen stock, but basically all stocks across the entire market, or just specifically whatever they were shorting. And now, because they had to buy back so much stock to cover all of their shorts, that effectively caused a small market recovery as they were liquidated. But after that liquidation had finished, there was no longer any buying pressure on Volkswagen specifically and also the wider market, and therefore the wider market continued to tank, as did Volkswagen. But then I think at this point, obviously the new low for the entire market, there must have been a number of positions that were liquidated and a number of hedge funds that had to liquidate their entire portfolios. Now, I think it just so happened that a number of these hedge funds that were very long on the market that got liquidated were obviously also shorting Volkswagen, which then caused Volkswagen to short squeeze. So we can see that during a short squeeze play that happens during a market crash, often the stock will fall with the wider market until that liquidation point. When those large hedge funds that are long on the market get liquidated, they'll be forced to sell off all of their portfolio, which includes covering their short positions. And the poster says this is why FUD is at an all-time high. They know that once the Evergrande fallout hits, or just as the wider market crashes, margin calls will be coming. We've all seen the Volkswagen squeeze chart, and now we see it in a new light. And you'll understand the exact moment it all went to hell for the hedge funds on the 24th of October 2008. Now, we know that the market crash is on its way. All you have to do is look at some of the stocks in the Nasdaq that are already down over 50%, like Etsy, PayPal, and many others, for example. And as Boss Blunt says, Citibank is selling off assets in China, as is the Royal Bank of Canada. They both hold large short positions on AMC, and Boss Blunt believes the short squeeze is imminent. Now, obviously, the fact that Citibank and Bank of Canada are having to sell off their assets, it means they're struggling to meet margin requirements and struggling to meet margin calls. And therefore, they need to sell off some of their assets that can't be used to meet those margin requirements and turn it into cash in order to meet them. Citigroup, one of the shorters of AMC and GameStop, has started to sell off some of their overseas assets, consumer banks in Asia and Mexico. Apes, the chain reaction caused by our patience has started. And I think it's important to remember that it's not just Citibank that's feeling the squeeze. There's been so many hedge funds recently, over the last few weeks and over the last year, that have had to close their doors due to falling profits and margin problems. As I spoke about in my video the other day, over 400 hedge funds in 2021 closed their doors. And this is in a year similar to 2020, when the S&P 500 saw some of its highest returns ever. Now, Sherry has asked a very valid question about some of those brokers that end up going bankrupt during the AMC squeeze. Obviously, again, I made a video the other day saying that many brokers won't survive the short squeeze. And Shelley asks, so if Robinhood or any other broker goes bankrupt and their stock ends up worthless, what happens to all of those people's shares and positions that are still open in Robinhood? Do Robinhood just not have to pay anything out, or is the money lost, or do the liabilities and shares get transferred to the next broker in the chain? Wired replied saying, from what I read months ago, users are granted a period to transfer to other brokers. Now, I'm not too sure whether this is going to be on an individual user by user basis and you can basically pick what broker you want to go to, or whether there'll be another broker that will acquire Robinhood for pennies on the dollar, for example. Now, Robinhood has a market cap of around $13 billion. If Robinhood go bankrupt during the squeeze and their stock ends up worthless, there may be another broker like Fidelity or TD Ameritrade or Moomoo that ends up acquiring Robinhood and all of their customers for $1 billion or $500 million or $100 million, for example. And in the event that happens, every single customer will be transferred to the new broker all at once during like a migration process or an onboarding process. So if your broker does go bankrupt during the squeeze, it's not necessarily the be all and end all, as that broker will likely be acquired by another broker that survives. Now, I guess it may be difficult to sell your shares during the squeeze if your broker does default and does go bankrupt, because that onboarding process may likely take a few days to a few weeks to complete. And that's why I've reminded you multiple times over the last few months that it's very important to sell your AMC in separate increments on the way up. You don't want to be holding every single share of AMC when all of the madness kicks off, because you may not be able to sell any of your AMC until after the squeeze. Obviously, if the SEC halt AMC for multiple weeks, or if brokers start going under and start having to transfer customers to new brokers, you just may not get the opportunity to sell. And that's why it's very important to sell during the squeeze and not sell after the squeeze. And finally for today, I wanted to give you a general reminder. Your investment in AMC isn't losing value. Short hedge funds are just spending billions and billions of dollars to make you think that you are. We know that retail investors and apes aren't selling AMC. From that screenshot on Webull I showed you the other day, 0.0% of Webull users are holding a profitable AMC position, and they're still holding all of their shares that they purchased in the $40, $50, $60, $70 region. And therefore, the only reason why the price of AMC is falling is because of market manipulation performed by these hedge funds. And for them to manipulate the market, they're having to create more and more synthetic shares, which is costing them billions and billions and billions of dollars. The only reason why the price of AMC is falling is because they're shorting more shares and they're having to throw more and more money into their short positions to push the price down. And therefore, even though the price of AMC is falling, the total value of their short positions is amplifying and multiplying, and therefore they're the ones that stand to lose more money. Guys, be sure to let me know down in the comments below what you think about AMC having a short interest of over 900%. And as always, guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.